Hey everyone, welcome back to Fast Stock Market News, where I give you all the news as fast as possible. So today was basically the big driver of today. If you saw my video yesterday, was the jobs report numbers, guys. It was kind of something that was going to drive the market. And it's honestly, in my opinion, it's pretty fitting that the market ended pretty flat for the day because the jobs report was a mixed bag of some good things and some bad things. As we see, the S&P 500 finished a negative 0.08% in the red. The Dow finishing negative 0.15% in the red. The Nasdaq eking out a win, finishing positive 0.12% in the green, and the Russell basically finishing flat. So the jobs report was the big driver today, and let's see what CNBC has to say.
The numbers are out. 372,000 on non-farm payrolls. And if we look at the 2-month revision, it drops down to 74,000. So we lose 74,000 over 2 months. Okay, let's dig a little deeper. On the private payrolls, 381,000, much better than expected. Manufacturing, 29,000, also much better than expected. The unemployment rate remained at 3.6. 1, 2, 3, 4. Fourth month in my memory of 3.6. Now here we go on earnings, up 0.3 exactly as expected. In my opinion, a bit on the light side for month over month. If you go year over year earnings, this is big. 5.1. Now granted, 5.6 is the high water mark for March, but we're expecting a number closer to 5. And in the rearview mirror, we see revisions coming, and I'll start with earnings just because that's where I'm at. Last month moves from 0.3 to 0.4, so actually the 0.3 as expected is a bit lower. The 5.2 last month goes up to 5.3, which takes a little of the sheen off 5.1. Average hourly work week, 34.5 hours. That's a bit light, and it is exactly equal to the revision, which takes it down from 34.6. And finally, the participation rate, in my opinion and the panel's opinion, one of the most important aspects of these employment reports. And when you consider it was at 63.4 pre-COVID, it's at 62.2. 62.2 is very close to where it's been the last couple of months. 62.3 last month. The month before, it was 62.2. And the U6, or the underemployment rate, is 6.7. That is a new low mark, which is good in this case versus high water mark. That's a new low post-COVID. The old one was 6.9 in March. So to summarize, the report is in many ways much better than expected. I would have liked to have seen a little stronger earnings, but they matched expectations. Interest rates have moved up, and that really is the litmus test. The market says that this number is pretty good. We're now at 307 in a 10-year, which was kind of half dancing with 3%. And if we look at what's going on with the yield curve, it's still inverted. Pay very close attention to the 3-month versus 10-year, which has just flattened out so dramatically in the last 3 weeks.
It's basically very fitting that the market ended flat for the day. There were some good, there was some bad. People have more higher wages year to date today than they did last year. However, inflation's out of control. Unemployment rate is low, which is good, but it's bad for stocks because that means the Fed has to increase Fed rates even faster. It's just a mixed bag, guys. And if you don't believe me that if you saw this report and you thought, oh, this is bullish, I'm going to keep buying stocks, it's all in perspective. We have a headline here. Just you can click this on Google and you can see right now. So basically it says Dow Jones reverses higher after June's job report. Beats expectations. Managed care stocks lead the market. Bullish. Everyone agrees. This is a great thing. However, now you see the other side. Basically, a robust job report clouds outlook for U.S. economy. A strong hiring report for June has assuaged fears that the U.S. economy might be on the cusp of a recession and highlighted the resilience of the nation's job market. So, again, guys, this is that's why a good thing that the market, normally it's trades like crazy, but this is an ideal time that it would trade flat. And overall, the jobs report, like I said, there was some good things, there was some bad things, but overall, there were no big surprises, so hence why we finished flat for the day. And yeah, guys, that's basically what was driving the market today. Not a lot of action happening. I thank you guys for watching the show, and I'll see you again tomorrow. Take care, everyone. Thanks again everyone for watching Fast Stock Market News. If you enjoyed the video, consider subscribing, commenting, or liking the video. I would greatly appreciate it. My name is Gio, and I'll see you tomorrow, guys. Take care.